Hi, I am Shay Rowell of the Rowell Realty Group at Keller Williams. And of course, today I'm with none other than Andy Gagliano. Do you want to introduce yourself, Andy?
Well, you just did. You did it better than I could ever do it. Hey, everybody. Thank you for watching again today.
So, as always, let's just kind of start off with an update from you. Tell us what's going on.
Okay,
And tell us that
so
it's a positive update this time, please.
yes, we have a positive update. So the Federal Reserve met last week and they decided they're doing nothing. That was no big surprise. But what happened that was of significance is they didn't change their stance about interest rates. They just said that we're still leaning, we still believe that an interest rate cut is forthcoming. It's just going to be a little while longer, that inflation is taking a pause in its decrease. And so because of that, the markets have rallied, interest rates have gotten better, and we're on the right track. So hopefully we keep up that momentum.
That's good news. That's a whole lot better than the last one you gave us.
I was a little gloomy on the last one, maybe.
Yeah, but as my mentor said, at the end of the day, we don't make up the numbers, we just report it.
That is so true. That is so
Just the
true.
messenger.
And I had a mentor back in the day when I started who he originally was in finance. So I believe he was a financial advisor. And then he went into the mortgage business. And then from there, he became a home builder. And so he told me, and through 4 years of college and being basically a finance major in college, no professor had ever said this, but what he said was if the markets go up, somebody makes money. If the markets go down, somebody makes money. If the markets stay the same, nobody makes money. And when you put it like that, it really kind of helps to rationalize why we have these ups and these downs like we do in the market. And it's just, it's an opportunity for people to make money. And so they're going to trade that. And that causes, when we get up, people will sell and it makes things go down and then people will buy. And that's why we end up bouncing in this range a lot of times. So,
I love that. I like that explanation. That I like that. I really do.
yeah.
It kind of puts it into perspective.
It does. And, it's very stressful when we're in that process. When we're in the process of trying to buy a home and the rates are real volatile, it makes it stressful. I know you and I get that, but buyers sometimes, because they're not exposed to it every single day, it's hard for them to really get a good grasp of that.
Yeah, well, I appreciate that, Andy. Let's go ahead and kind of jump into our topic today. So, the
Okay.
last time we talked about appraisals, which we still have to come back and do a part two for. Today, I wanted to talk about, I told you we were going to kind of go back to the basics. So, today, I wanted to talk about give me your top three things that a buyer probably, I'm going to say probably shouldn't do while they're under contract. It's a
Very
spicy
good.
topic.
Very good topic. And yes, goodness, as many times as we tell buyers, please don't do this, some of them still do. So I'll start right off the bat. Don't buy anything.
I thought you were going to say
Obviously,
don't buy a car.
well, that's going to be in that anything category. And when I say anything, I mean anything. If it's over three, four, $500, just wait. Just wait to buy it. Chances are it's not going to be life or death for you. Obviously, there's things that we have to do. If you have a vehicle and that vehicle breaks down, you have to get to work. You need to get that vehicle fixed. I don't necessarily need to know before you go get that vehicle fixed, but I need to know, what is the cost of that repair? Are you paying cash? Are you going to pay credit for it? If you pay cash, are you going to still have enough money to complete the transaction? If you're going to put it on a credit card, are we pretty much through that period of time where we're going to be looking that heavily at your credit card balances? And if we are, then that's fine. Go ahead and do what you have to do. If we're not through that time, the of course my recommendation would be, and this goes to, I guess, number two, don't go open a new credit card or any new credit to pay for those auto repairs.
Mm-hmm.
So, bouncing back to number one, that buying anything, it literally could be anything. I mean, when I first got in the mortgage business and started my company, not long after, I was working with a young couple. They had just gotten married. They had exactly $5,000 to purchase this home in their account. They needed $5,000 to purchase the home the day before closing. And I told them, I said, don't go buy anything. Don't open any new credit. Well, they heard the last part of that. Don't go open any new credit. So they didn't. The day before closing, they went and bought $1,000 refrigerator because the house they were buying did not, the refrigerator didn't go with the house. So here we are the day of closing, and I call them to give them their number for how much money they need to bring to closing. And thankfully, it is right in line with what I told them they needed, right at that $5,000 mark. And the wife says to me, we only have $4,000. What do you mean you only have $4,000? You just had $5,000 in your account. I just verified it the other day. Well, we went and bought a refrigerator and we paid cash because you said don't open any new accounts. I said, well, there are two parts to that.
Oh, so they
Don't
pulled the
open
cash out of that account?
They pulled cash out of their savings account and bought the refrigerator.
Okay.
And they, so as far as closing goes, we were fine because we'd already verified the funds
Right.
that they had the funds available. But real world dollars and cents, they didn't have it. And so it's not like they could go and just produce a cashier's check for $5,000 because they didn't have the $5,000. So things like that can create a lot of last minute stress. So I'm going to bounce into number two from here.
Okay.
Number two, I just talked about that is don't open any new credit because what we do in the mortgage industry is the day of or the day before closing, we're going to repull a buyer's credit.
Mm-hmm.
We want to make sure that there's been no new judgments brought against that buyer, that they haven't gone out and bought a Rolls Royce on 60 easy payments, anything like that. That's why we do those things. And so we want to make sure that their credit during that 30 to 60-day window while we're working on their loan has not changed to the negative, and that nothing has popped onto their credit report that could keep them from qualifying for the loan. So that is number two.
Okay.
And number three is still one other thing that kind of surprises me. And I would say it surprises me that people do it. And I would say, please don't make any payments late. You know,
Mm,
that for people who have good credit, that's generally not an issue. But for somebody who's borderline on their credit scores, if they are getting an FHA or VA loan and their credit scores are in the low 600s, high 500s, and they're late on something else, remember I just said we're going to repull somebody's credit the day before or the day of closing, and any of those late payments like that can delay us from closing on that loan on time because we may have to get more clarification or verify that that account has been paid and is current at that point in time. So I would say those are my top three.
Okay. Can I add, don't quit your job?
Please do, because, you know, that generally, I don't know. I would say that and late payments probably happen about the same number of times. But yes, you can absolutely add that on there because that is another biggie. The things that we look at for in the mortgage industry the most closely as we're going through the loan process are assets, income, and credit. And so if someone does something to negatively affect any one of those three things, then that's going to create an issue as we're going through the loan process. So, yes, definitely income would be right up there at the top. Don't quit your job. Don't, and here's something that does happen a good bit. From time to time, I'll have someone call me and they'll say, "Hey, I've got great news. I just took a new job within the company,
Mm-hmm.
same company, but I got a promotion and now I'm receiving some commission income. So I get salary plus commission. So my salary's decreased, but now I have commission and I can make a lot more money." Well, that's not good news because for someone who receives commission, we have to use a 2-year history of that commission in order to be able to come up with an average amount of income to count for commission. It's not like salary where that's a guarantee. You're going to get that much every single pay period.
Mm-hmm.
With commission, it could be really high one month, could be really low the next month. And so we have to verify it over a 2-year history, come up with an average, and that's what we use to calculate that commission income. And so, yeah, I, things like this do come up, and so we typically tell people if you have the opportunity to get a promotion while the loan is going on, please call me the day that opportunity arises before you ever accept it. And I can't imagine a boss out there anywhere in this world that if you said, "Hey, thank you so much for the opportunity to take this promotion and increase my responsibilities within the company, but I'm in the process of getting a mortgage and I need to check with my mortgage loan officer to make sure that this is not going to negatively affect me." I can't think of a boss in the world that wouldn't say, "Please, please do take your time, check with your loan officer, check with your spouse, check with your trusted advisor, whoever you want to check with." And let them know, tell them I'll let you know something by tomorrow or Friday or, whatever time frame you want to give yourself. But that is another big one. Yeah. And, the whole quit your job thing, changing companies from one company to another, that comes up and that creates issues as well. So anything like that, and most people, before they make a job change, they're interviewing.
Mm-hmm.
So if you just happen to be interviewing when you apply for your mortgage, tell your loan officer to say, "Hey, I'm interviewing. I'm not 1,000% happy on my job. And so I'm interviewing, I'm looking at other opportunities. And if something comes up, I will be certain to let you know prior to my taking the job." That's all we need to know. Life goes on, Shay, as you know, and people are going to change jobs. People are going to buy things. People are going to open new credit accounts. Uh, some people are just going to be late on credit. Life goes on during this loan process. But what we in the mortgage business would like to see is a snapshot that of someone's financial picture that does not change whatsoever. So don't think a 2-minute YouTube video clip. We want a still shot, a snapshot of that person's financial history so that nothing does change.
Okay. So first of all, I do have a question. Did that couple end up closing?
They
Did y'all fix that?
did. So
Good.
yeah, they did. The wife's mother was a real estate agent, and the agent who referred them to me. And
Mm-hmm.
so she was able to gift them $1,000 out of her commission from the sale to make the transaction happen. And we actually did end up closing that one on time, which, given the time of all this, was pretty amazing because, as you know, I started in the mortgage business when we used stone tablets and two tin cans with a string, and that was our telephone. And so to be able to still close that loan on time back then when we don't have the technology or didn't have the technology that we do today was pretty
Yeah.
awesome. So yeah,
Okay. Okay. So for my roundup, basically what I got from this, or I'll just tell you kind of what I tell my clients. I typically tell my clients, do not make any kind of financial decisions without talking to Andy, or just without talking to your lenders, typically Andy. But do
yeah.
not make any type of financial decisions without talking to them. Do not go out and buy a car. Do not open up any credit. Do not quit your job. Do not change, like anything that you're going to do over the next 30 days or however long you need to tell one of us. And that's basically kind of what I've gotten from you. I tell them that on the day of closing, you need to be just as qualified as you were the day that you got your pre-qual letter.
Yeah.
That's basically what I got
Yeah.
from you today.
That's so true. Yeah. You
Do you
you
have
hit the nail
any
on the head.
Do you have any final thoughts or final words?
I don't. I mean, hopefully I stressed it enough. It is extremely important because the last thing you want to do as a buyer is go through this entire process,
Hmm.
30 days where you feel like you've been financially violated
Right, right.
and your loan officer knows more about you than your spouse or your own parents or your own children. And then you go through that entire process, and the morning before closing, something happens that prevents you from being able to buy. Because at that point in time, your plans are made. You've got movers lined up, utilities lined up. You've told all of your friends and family that you're moving, and they're all excited for you. And then, should something keep you from making that final step and making it to the closing table, it's just heart crushing. I mean, it is awful. And
Yeah,
so it 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 is so important to do what Shay said to do and what I said to do, and just don't.
yeah.
If you want
I,
to, don't.
I do have well, first of all, I want to say thank you for breaking it down. Thank you for explaining it because I know that we tell them not to do these things, but a lot of times we don't give the why behind it. So I do want to thank you for giving them the why behind it today. And I do have a couple of just kind of final thoughts to throw out. First of all, I know sometimes buyers feel like they don't want to bother you. And so they won't tell you things because they feel like, they're being a nuisance or this is something small. And I will say, like, it's our job. It's not a bother. I would, and I know anybody else working in the industry would rather you tell us and let us, guide you through this versus, like you said, getting to the closing table and finding out that because of this one action, now we possibly can't close or we have to push back closing. It's never a bother. It's our job. It's what we do.
So true.
So that's the first one. And then secondly, of course, this doesn't go for everyone. Like we're just kind of speaking in general. There are some people who can do some of these things. So again, it's just all about communication. It's all about being open. Because another thing that I tell clients is do not lie. We don't care, but do not lie. These are not the people
Yeah.
you want to be lying to. So
Yeah.
like I said, obviously this doesn't qualify for everyone, but generally these are some things that you kind of want to stick to. So
Yeah.
That's it.
Yeah. That's perfect. And I generally will tell my buyers, I'm not asking you to do these things or not do these things because I want to run your finances.
Right,
I have enough problems running my own. I don't want to run yours, but I do want to help you complete this transaction.
right.
And so that's why I make the recommendations that I make. But yeah,
I always
those are
tell
two
my
great points.
people it's 30 days. We'll be fine. We can make it through 30 days.
It's true.
And then you can go buy all the furniture you want. You can buy whatever car you want. I don't care. But for the next 30 days, it is what it is.
It's true.
All right.
Yeah.
Well, thank you.
Thank you,
Thank you
Shay.
again. Um, yeah, I mean, I felt like this was so short, but this was good. I like this. So thank you. I
You're
appreciate you. I know
welcome.
everybody watching appreciate you. Um, that's all I can say, honestly.
Well, yeah, thank you everyone for watching. And Shay, thank you for the opportunity to do this again with you today. And I look forward to seeing you in a couple of weeks. And if somebody wants to reach you, how can they contact you?
You can give me a phone call at 205-567-9713, or you can text me. What
All
about
right.
you?
Yeah, they can call me at 205-979-4412, and I'm an extension 1.
Okay. Well, again, thank you so much, Andy, and thank you to everybody for watching.
Thank you, Shay. See you in a couple of weeks.
Bye.
Goodbye.